Hi, it's Eric Daly of the Molt Lumber Group, and here's what you need to know if you're a retirement plan sponsor for the week ended Friday, April the 25th of 2025. What's been interesting to watch from a market perspective, while the headlines have been oriented around the S&P 500 index, the Nasdaq, the Dow, the impact of tariffs on those particular equity indices, I think the more notable impact has been that of the change in price and value of the US dollar. So if you look this week, the dollar is down about just under 10% from the start of January to recent. And that has a compounding impact in a number of different areas. The first of which is certainly, in addition to tariffs, it makes imports less accessible to US consumers, making it more difficult, more expensive to bring imports into the country. The second likely has to do with the impact on the bond market. There's been a lot of talk about the 10-year Treasury as being significantly important as it pertains to the cost of funding the government. We've seen a spike in Treasury yields, especially on the long, intermediate to long side of the curve over the course of the last month or two. Some compounding component of that is likely this weakening dollar. Ultimately, if the dollar isn't strong, it will demand, or at least external purchasers of treasuries will demand a higher yield to essentially protect themselves against the potential of a weakening dollar. And I think that that is another compounding factor to some of the challenges that the economy finds itself in today.